Today I'm going to look at two different brokers that offer automatic investing of ETFs and stocks. Please press that like button and subscribe. It really helps the channel out. Okay, so the first one I want to look at is Sofi Invest. I recently opened this account and I just funded it today. I'm going to skip past the sign up process. It's fairly easy. To add cash, you basically go here. You put in the amount and then you put in your bank account info. Now, if you want to refer people, you can also refer people on here. There's a new account option here. Two of these sections are already grayed out because I'm already enabled for stock, ETF, and crypto. But then there's also two more options down here. You can have Sofi build the portfolio for you, like robo investing. And then there's also an IRA option. Probably the most important part of the site is this little search bar here. So if you actually want to buy a stock or ETF, you type it in here. So here you have Microsoft. As far as the functionality goes, they're very limited. You're limited as far as what sort of options they give you. It's sort of like Robinhood. They try to dumb it down as much as possible. When I did the review of Fidelity and Schwab and E-Trade, you clicked a second time on Microsoft. Then you actually got all the financials, the statistics, 5-year financials, research reports, all the different ratios, the price to earnings ratio, price to book ratio, all that stuff. This, they basically it's sort of like Robinhood. They give you a stock chart. They give you a few news stories. I think you may have the price to earnings ratio, the dividend yield. It doesn't get much more detailed than that. So if you want to do research, you're probably going to have to go to another website. You can go to, use another brokerage like E-Trade or Schwab or Fidelity, or you could do Yahoo Finance or any of the various websites for your research if you're going to research stocks. Now with this, you can actually buy stocks. The nice thing about Sofi Invest is they actually let you. Now you could do a market order, or you could do fractional shares. You could do fractional shares. You could do a limit price. You could do all different things here with this one. Whereas with M1 Finance, you can't do any limit orders. Another thing you can do with Sofi that I really like is you can do add a reoccurring purchase. I believe there's 4 brokerages now that for no additional fees, you can do reoccurring investment with an ETF and stocks on 3 of them, and then with E-Trade, just ETFs without a fee. Now, I believe Fidelity and Schwab have that option, but it's a separate program that's like a fee for it. I don't pay for that kind of stuff. But you could do here weekly. What's kind of interesting is they put Sunday and Saturday. That doesn't make sense, but Sunday and Saturday, and then I guess it would get executed the following, You could do every 2 weeks, monthly. Now, a lot of this stuff is kind of ads when you first start out. So the nice thing is they let you X out of this and close them for good, hopefully. You can do IPO investing. That's the first I've ever heard of a brokerage offering that. There's options. Okay, let's close that. Margin investing. Let's close that. Extended trading hours, 9 a.m. to 8 p.m. Okay, you can get up to $100 in Bitcoin when you make your first crypto trade. I'm not interested in crypto, but I am interested in the bonus. But the bonus, you have to actually invest like $5,000 to get the $100. So I'm not going to risk that much on something so risky. Here's a bonus, $25 to $5,000 when you transfer from a brokerage to Sofi. Let's close that. Okay, you can automatically reinvest cash dividends. Everybody offers that pretty much. You basically just have to check here to enroll in dividend reinvestment. If you keep scrolling down on the front page, you would expect this would be at the top of the page like most brokerages, but for whatever reason, Sofi puts it way down. So you have to scroll way down in order to see this. And then for some reason, this app thing keeps popping up. If you keep scrolling down, you'll see there's a thing called diversified portfolios. This option here basically, you can pick a generic portfolio. There's aggressive, moderate, and conservative. And if we click on this, we have a bond ETF and a stock ETF. I believe this is different than the robo advisor because this option here, you can select this right away, whereas the other one, you actually had to open a new account. If you go under here, new account, you would see I went Sofi to open a new account, start a new retirement or investment account. You can also select from popular stocks here. You can pick some of the Sofi. It looks like they're promoting their own ETFs here. So you could click on those, invest in those if you wanted to. Yeah, they do have Vanguard. You could do Vanguard. You can do, let's see, probably QQQ. Yep, QQQ. So that's pretty good. Okay, Sofi uses Apex clearing for their order flow. So all the orders, that goes through Apex clearing and then they route the orders. So when I actually looked at this, you look at the pay for order flow. Since there's no commissions, of course, they're getting paid for the order flow in the back end. If you look at the payment received for order flow, they're about less than half of what Robinhood was charging. Robinhood for the S&P 500 was charging around, I think, 40 cents to $1 per 100 shares. This one is anywhere from, SoFi is anywhere from 0 to 20 cents for 100 shares for the S&P 500 stocks. Much lower price. For the non-S&P, it's from 0 to 15 cents. You can see it right here. Right here. Okay, so much for that. Here are the Sofi Invest fees. There's not very many fees that you can see. $0 commission. Wire transfers out, $25. Transfers from another firm, like a brokerage transfer, $75. IRA closing fee, $20. Returned ACH fee, $15. Paper statement fee, $5 a statement. And then there's regulatory fees. Nothing else to show, really. Okay, now let's look at M1 Finance. So I recently signed up with M1 Finance, and actually my order executed today. I didn't expect that it would execute today. I thought that I had canceled it. So you really have to be careful about M1 Finance because they really want you to buy right away. So right when they don't have limit orders, which I don't like. The thing that M1 has that's better than anyone else is you can set up the pies as a percentage. So if you want to buy, like today I bought Google, Microsoft, and Apple. The $100 I had was broken into thirds roughly. And then it just placed a market order and bought it first thing in the morning. So as you can see, for the free account, there's only one order type available, and that's morning, 6:30 a.m. So you don't know what the price is going to be. You just put in the dollar amount that you want to invest, and then whatever the market price is at 6:30 a.m., that's when it executes. If you want to do a different time, like any different time window here, you have to pay $125 a year and upgrade to M1 Plus, and then you'll have that option. Now, here's the thing that I was really confused about from the start. So there's a thing here called buy and sell. That's when you first set it up. When I first set this up, this is my pie, and then the slices are basically the stocks that you have in that pie. The pie is, the entirety of this cluster. But when you first buy, it's buy and sell. It's not going to try to rebalance every single day. That's what I was afraid, that it was going to try to basically buy and do a lot of selling to try to rebalance to keep these ratios every day. But it doesn't do that. Now, if I clicked rebalance, then by tomorrow, I think it's going to try to rebalance this where they're all the same. I would suggest not doing that, because if you start rebalancing, you're going to have like all kinds of capital gains taxes you're going to have to pay. Okay, so how does this work? Let's say we want to look up some stocks. You go back here. If you go to the research tab, you can put in a stock ticker like, let's say, Microsoft. You could watch it, or you can add it to the portfolio. Some of the chosen slices already exist, okay? So let's go back to research. Now that's the thing about M1 is sort of a dumbed down version of, it's basically for asset allocation. Basically, this is not for traders. This is for a long-term investor. It's for buying and holding for probably at least 2 years. So if you want to invest in M1, you probably shouldn't invest for that money you probably don't ever want to take out for 2 years. And there's a reason behind this. They've set up the system where it's basically there's only one way to go, and that's long-term investing. There's no other way. And if you try to do it another way, you're going to lose money most likely. Another thing they have is, due to the fact that they don't have limit orders, whenever you start accumulating a lot of money, all the stocks that you hold, when you go to sell, you're going to have to sell at a market price. So you've seen what's happened in the last couple years. The stocks have went down quite a bit, even the tech stocks that were up really high. So if you were in a situation where you put money in some of these tech stocks, and then a year or two later, you decide, oh, I need to take out some money, you're going to be stuck possibly selling some of these stocks at a loss with the market order, because they go up and down so much. Look at what Tesla's done on a day-to-day basis. You could wake up one day and it's 5 or 10% less. To me, this M1 platform, you really shouldn't be using it for stocks because it's going to be difficult to sell, especially tech stocks. So I feel like the system's sort of flawed in a way. And so the way I think it works best is if you're using it with ETFs like Vanguard or Schwab or any of the numerous low-cost ETFs, because more than likely they're not going to go up and down so much in a day. And so if something happens in a couple years and you want to take money out, more than likely you're going to make a profit. Whereas with the stocks, it's going to be, they fluctuate so much in a given day that if you're just seesawing above, if your stock has fallen after a year or two and you're seesawing, where you could be at a profit or loss, with the small margin, it's best that you would have if you had the option to do a limit order, you could keep yourself from having a loss. But with M1, you're stuck just at the will of the market. So that's the thing I don't like about it. And another thing is, when you go to sell these, the free version of M1 only lets you trade in the morning. So in a lot of cases, we've seen announcements in the afternoon or earnings, and then you wake up in the morning and the stocks, opened much lower or much higher. So in some cases, you could place the order, a day or two before the automatic investing. And when the order gets executed in the morning, you're going to get it at a price you don't want. So with dollar cost averaging, that's not so much of an issue. But the main thing that bothers me is when you sell it. I think they really should have a limit order on selling. You could put a limit order when you go to sell. They don't have that yet. Here you can look at the funds they have. These are some ETFs. Now, if you go to try to research these, if you try to research stocks, there's nothing. It's basically like Robinhood or like Sofi Invest. It's very limited data. You have a expense ratio. You don't have any sort of financials other, like if we go to Google or Alphabet, it shows you the holdings. That's about it. Now, if I wanted to change this pie, I could edit this. I could edit this pie. If I want to reduce Microsoft, I could reduce this to a lower percentage if I wanted to, or I could set it to equalize, and then I could hit rebalance and it's going to automatically try to buy. It's going to try to change that allocation. The thing I don't like about M1 also so much is it just feels like there's a lot of ads. So you can't really close this stuff. So all this stuff here, that they keep wanting you to sign up for M1 Plus, which is $125 a year. And that gives you a higher interest rate on the checking account. It basically gives you a regular rate checking account, similar, actually less than what you'd be getting with a Wealthfront account or Current or Marcus. I think Marcus is even paying higher than this, and you don't have to pay $125 a year. You get 1% on debit. You get some perks, some cash back perks, 1.5% cash back. I've got 2% now with the Fidelity card, and I don't have to pay anything for that. So for me, this M1 is not worth it for these two things. Okay, here are the M1 fees. There's the basic SEC fees, regulatory fees. There's a paper statement fee of $5, paper tax statement fee, $5, tax documents, $50. I think that's if it's paper. Inactivity fee, this is kind of a weird one. Accounts with up to $20 and no activity for 90 plus days. I don't know why you would have that little. I mean, one dividend payment is going to be more than $20 probably. Outgoing transfers to another brokerage, $100. IRA termination fee, $100. Mutual fund sales, $20. Check request, $25. Return checks, $30. Outgoing wire transfer, $25. M1 Plus, $125. The crypto fees are 1%. You have a very limited stock screener from what I can tell. Actually, when I click on this, it doesn't give you any more options. You have market cap, price earnings ratio, and dividend yield. That's about it. If you want to see price to book or anything like that, that's not an option. They also have a expert pie. I do like their expert pies. You can do conservative, aggressive. So this ultra conservative one is invested in treasury bonds, developing markets, Vanguard small cap, Vanguard S&P 500. And so if you wanted to invest in just this, you could hit add to portfolio. And it's basically like buying a mutual fund. It's going to place a market order. You get quite a bit of diversification. So you have different ones to choose from. Then they have one for responsible investing. So if you want to invest in like solar stuff, like Tesla's probably in here. And they have one you can do for income earners. Here's one with 3.7 dividend. They also have this one here called hedge fund. So this is kind of interesting here. You can you pick these different hedge funds. Here's Carl Icahn's company. And it tries to emulate the returns based on their holdings that they have. Now, I believe these are 3 months. They're delayed based on these guys have to report when they bought the stock. So you're sort of riding on the tail end of them. You're kind of following them after they've already bought. They could have sold it by then, but you can see here that Carl Icahn's got a bunch of different companies here. And this one has 13 holdings. Or you can do Berkshire Hathaway, and I'm not quite sure why you would do this versus not just buying Berkshire Hathaway stock. But Berkshire Hathaway has 20 holdings. So if you didn't want to buy Berkshire Hathaway directly, you could just buy the publicly owned stocks that they own. Now Berkshire Hathaway owns a bunch of companies that are now private, like Dairy Queen and Geico and a bunch of those. Those aren't going to be on here. So this would be a smaller section that you're owning of Berkshire. So that's one thing I do like. Actually, the best thing that M1 has to offer is probably this here. It's probably this here combined with the asset allocation, because I don't really think that stocks are a good idea with M1 because they don't have limit orders. It's going to be more difficult to tweak it. If you're buying stocks, you're really trying to tweak things and to maximize your profit, and to not have limit orders just kind of ruins it for me. But if you're buying these ETFs or these funds and you're just holding it for a long time, more than likely after 2 or 3 years, most of these strategies are going to be profitable, and you could sell it with the market order and not have to worry too much about it fluctuating so much. I don't know about, these cannabis ones or some of the other ones, but if you do a general one of these general type funds, not the crazy ones, it's probably safe. So that's what I would say. So what's my opinion of M1 versus Sofi Invest? What's the best use case scenario for each? I would say for this one, for M1, if you don't do the rebalancing within the year, if you don't rebalance until after a year, you could put this in a regular investment account. But if you're doing the rebalancing quarterly, then I think this would be best for a retirement account because you're going to have capital gains. But I think it's best for one of these fund type strategies where you're buying the ETF funds, one of these ETF pies, versus actually buying the stocks. And then I think for Sofi Invest, I think you could use Sofi Invest for either general purpose investing or retirement account, and you can use it for ETFs or stocks, and it's not necessarily all long term. So if you had to sell something within the year, this is a safer bet for a regular account, whereas M1, I'd say, is more of a retirement type account. It's more of a long term. This is more for buying and selling. If you want to do automatic investing with stocks, this is the way to go. It's not M1 Finance, because if you need to get out of stocks, you can place limit orders on this. And I think that's what I would use this for. I would use Sofi for stocks and ETF. I would probably use Sofi for most of the investing. And then if I need to just put money away for like 10 or 20 years and not touch it, then maybe M1 Finance. But I think for less than 2 years, Sofi is a better option. I hope you liked this video. Please feel free to like and subscribe, and have a good one. I'm going to actually put a link in the description at the end. If you want to sign up with M1, you can actually get $100. You can get $100 to invest. You do have to deposit $5,000 within 30 days. So it doesn't have to be all at once, but you would have to put it in within 30 days in order to get the $100. But if you're looking to do some long-term investing, I think this is a good option for really, really long-term, like not just 1 year, but I would say 2 years or more. And if you're doing ETFs, so here you can see the terms. It says deposit $5,000 within 30 days. You get $100, and I believe once you sign up, you can also refer your friends and family also. Now with Sofi, I can't actually refer. It's against the terms and conditions for me to actually refer to somebody that I don't personally know, and posting a link on YouTube is not acceptable according to their terms. So I can't. You could sign up on your own for Sofi. And I hope you like my video. Please feel free to like and subscribe, and have a good one.